Welcome back to BitcoinDorks. Today, we're diving into an intriguing topic that's been buzzing in the crypto community, the Bitcoin halving rally and whether it's already priced in. So, grab your favorite beverage, and let's explore what the CEO of Marathon has to say about it. Now, if you've been following Bitcoin closely, you're likely aware of the concept of halving, a fundamental event that occurs approximately every 4 years. During a halving, the supply of new Bitcoins issued to miners is cut in half, leading to a reduction in the rate at which new coins enter circulation. Historically, this scarcity has been associated with significant price rallies in the months leading up to and following the event. However, according to the CEO of Marathon Digital Holdings, one of the largest Bitcoin mining companies in North America, the anticipated halving rally may already be priced into the market. In a recent interview, CEO Fred Thiel shared his perspective on the matter, suggesting that the impact of the halving on Bitcoin's price may have already been factored in by investors and traders. Thiel's argument revolves around the efficient market hypothesis, which posits that asset prices reflect all available information at any given time. According to this theory, if investors anticipate a significant price increase due to the halving event, they will adjust their buying and selling behavior accordingly, leading to a gradual assimilation of this expectation into the market price of Bitcoin. In essence, Thiel's assertion revolves around the efficient market hypothesis, a theory suggesting that asset prices reflect all available information at any given time. According to this hypothesis, market participants, driven by self-interest and rational decision-making, incorporate new information into asset prices almost instantaneously. Therefore, if investors widely anticipate a significant price surge due to the halving event, they would adjust their buying and selling behavior accordingly well in advance. This proactive adjustment process, known as pricing in, implies that the expected impact of the halving has already been reflected in Bitcoin's current market price. Thiel's argument challenges the notion that the halving event alone serves as a catalyst for driving Bitcoin prices higher. While historically, halving events have been associated with bullish sentiment and price rallies, Thiel suggests that the market's forward-looking nature may mitigate the immediate impact of the event on prices. In other words, the anticipation of the halving and its potential effects on supply and demand dynamics may have already influenced market sentiment and prices prior to the event itself. This perspective introduces a nuanced understanding of market dynamics surrounding the halving event. Rather than viewing the halving as a deterministic factor leading to a predetermined outcome, Thiel's viewpoint emphasizes the role of investor expectations and market efficiency in shaping price movements. While the halving undoubtedly has fundamental implications for Bitcoin's supply dynamics, its impact on prices may be more complex and multifaceted than previously assumed. Ultimately, Thiel's argument underscores the importance of considering various factors and perspectives when analyzing cryptocurrency markets. While the halving event may represent a significant milestone in Bitcoin's history, its impact on prices is subject to interpretation and debate. While some analysts may emphasize the historical correlation between halving events and subsequent price rallies, others, like Thiel, suggest that market efficiency and investor sentiment play equally critical roles in shaping price movements. In addition to the halving event itself, a myriad of factors collectively shape the intricate tapestry of cryptocurrency prices. Market sentiment, for instance, plays a pivotal role in influencing investor behavior and, consequently, asset valuations. Positive sentiment can lead to increased buying activity and upward price momentum, while negative sentiment may trigger selling pressure and price declines. Macroeconomic trends, such as interest rate policies, inflation rates, and global economic indicators, can have profound effects on cryptocurrency prices. For instance, economic instability or uncertainty in traditional financial markets may drive investors towards cryptocurrencies as alternative stores of value, leading to increased demand and upward price movements. Regulatory developments wield considerable influence over cryptocurrency prices, as government regulations can impact market accessibility, investor confidence, and the perceived legitimacy of digital assets. Positive regulatory news, such as regulatory clarity or favorable legislation, often leads to price appreciation. Whereas regulatory crackdowns or uncertainty may dampen market sentiment and drive prices lower. Technological advancements also play a significant role in shaping cryptocurrency prices. As innovations in blockchain technology, scalability solutions, security protocols, and interoperability features can enhance the utility and adoption of cryptocurrencies. Projects that successfully implement cutting-edge technologies or solve pressing industry challenges may experience increased demand and positive price movements. Geopolitical events, such as geopolitical tensions, trade disputes, or geopolitical shifts, can have far-reaching implications for cryptocurrency prices. These events can impact investor sentiment, market volatility, and global economic conditions, thereby influencing the demand for cryptocurrencies as alternative assets or safe haven instruments. The crypto market's inherent volatility and unpredictability add an extra layer of complexity to price dynamics, making it essential for market participants to stay informed and adapt their strategies accordingly. Price fluctuations in the cryptocurrency market can be swift and dramatic, driven by factors ranging from speculative trading to market manipulation to unexpected news events. In conclusion, the debate over whether the Bitcoin halving rally is already priced in highlights the complexity and uncertainty inherent in cryptocurrency markets. While some believe that the event's impact has already been factored into the price of Bitcoin, others remain optimistic about the potential for a post-halving rally. As investors and traders navigate these uncharted waters, it's essential to stay informed, stay vigilant, and stay tuned to BitcoinDorks for the latest updates and analysis on all things crypto. And that wraps up today's video.